Let us help you reach your peak in retirement. It's time for Retirement Elevated with Sean Lee.
Hey everybody, welcome into another edition of Retirement Elevated with Sean Lee, Managing Partner at Elevated Retirement Group, serving you in the Salt Lake City area from the office in Sandy. I'm Mark Killian, the co-host, riding along shotgun as we talk about investing, finance, and retirement and all that good stuff. And we try to keep it informative, entertaining, and educational. I guess informative, educational, the same kind of thing, but you get what I'm saying. So make sure you reach out to Sean if you got questions or concerns by calling him at 855-50-RETIRE. That's 855-50-RETIRE. Or locally, if you need the number, it's 801-639-0095. That's 801-639-0095. And as always, make sure you subscribe to the podcast if you have not yet at retirementelevatedpodcast.com. That's retirementelevatedpodcast.com. You know, everybody's Bluetoothing their phone to their cars now for music and various things, whether it's Apple or Apple Play, CarPlay, whatever that thing is, or listening to podcasts. So people are turning away from traditional radio or satellite radio more and more to check out podcasts when they have time. So make sure you do the same thing with us. And with all that said, Sean, buddy, how are you?
I'm doing great, man. I'm glad to be back again for another week.
That's right. I appreciate you here. I know that the missus just had a birthday at the time of our taping of this podcast. Did that go well?
It did. It was a lot of fun. Like we talked about a little bit ago, it wasn't a birthday day. It was
she got the
birthday weekend, and now it's moving into the week. But I hope she enjoyed it. She's going to celebrate this year. It's her last year in her 30s, so she said she's going out with a bang.
Gotcha,
right, let's
gotcha.
do it.
Yeah. I'll be 48 this year, so I can relate. As 50's creeping, I'm like, I don't know what I'm going to do for 50, but it'll be curious to see. So, well, kudos and happy birthday to Mrs. Lee there. So we tell her we say hi and we appreciate her letting you do this show with us. So now let's do it. Let's talk a little bit about our topic today. I want to talk a little bit about the true value of an advisor. I know Vanguard recently just came out with a new study talking about where and how an advisor should be adding value. So tell us a little bit about that.
What Vanguard did was pretty cool. They created this advisors alpha concept in 2002. So over the last 18 years, they've gone through and they've really researched the value of an advisor. The cool thing about this is that Vanguard they're that group that says, hey, low cost indexing funds, use those, create your allocation, and don't worry about it.
Right.
But as time has gone on, and really investing has become a commodity for the most part, it's, everybody does investing. Everybody who carries a license can recommend investments. And let's be honest, you can't outperform the market. Outperform the market's super difficult. But what they did is they focused on the intangibles, all those other areas that an advisor could add value. And what they found through this study is that if an advisor is focusing and really truly providing advisory services and not just investment wealth management, they can add anywhere from 0 to 3% to a client's portfolio.
Wow. So up to 3%, huh?
Yeah, I mean, that could potentially be a big deal.
No,
right?
It is. Yeah, exactly.
And what they said in this study is that 0 to 3% is net of fees that the advisor would charge. So looking at that and having a group like Vanguard who's always focused on low-cost indexing funds, and just investing that way, having them come out with this study is pretty cool. So I look at it about every 2 years. They just came out with a new one in July of 2018.
Yeah, and I'm trying to quickly skim through some things here. So a couple of the areas they touch on is like serving as an investing coach, minimizing the taxes, building the portfolio with low-cost funds. So all of those things. So if you're up to 3%, a lot of times we have these conversations where people are like, well, I know my advisor's charging me, 1%, let's say.
Yeah.
Then if you're talking that the advisor's bringing 3% in value, then that's a pretty good return on investment.
I mean, it could potentially be huge.
Yeah.
And the big one that I look at when I saw this study, there are two main areas.
Okay.
Well, let's call it three. The first one is true financial planning. Not just building hey, here's your investment strategy, but really bringing into the fold, an income strategy, an investment strategy. What I think is the most important, which is a forward-looking tax strategy. That side is huge because then if you start to build a plan and you start to segment your dollars and you start to look at, okay, what do I really need to accomplish down the road? Do I need a certain level of income? Do I need to create sources of cash flow from my investments, or am I going to have enough from pensions, Social Securities, whatever it may be? How does my plan need to look? having a plan that's not only created once, because it's not financial plan, it's financial planning, that then you can monitor and you can tweak and you can adjust, because life happens, life changes. And having a forward-looking tax plan and having all these different pieces plugged into just a one succinct plan can make a huge difference.
Yeah, so the service-centric model that you're talking about, it's behavioral coaching, right? Investment management, financial planning, wealth management. So there's all these kind of different components that kind of factor into there with this advisor's alpha concept that they're talking about. And so how does that relate with what you guys do? I know that you guys have been doing this for a long time at Retirement Elevated here on the program. So what do you guys kind of take from this when you see something like that or you hear this study?
Yeah, I love it. And I mean, this follows our process almost to a T. I mean, when we meet with people, yeah, investments are part of it, but I always tell people, hey, investments are the means to an end. And let's get down and dirty. Let's figure out what your math problem is.
Right.
How do you want to solve that math problem?
Okay.
Whether you use protected money, market-based money, a combination of the two. And let's figure out what's going to happen to you from a tax perspective, because when you start to look at taxation inside of your retirement plan, that, in my opinion, could make or break a plan. That could have a dramatic effect on how much money you have left over at the end. And I call it addition by subtraction. So focusing on what type of account should I pull from? When should I pull from? How should I incorporate Social Security into the mix? And by having a tax forward-looking strategy, in many cases, if you just put some thought into it and you determine that, hey, we're going to pull some money from here first, we're going to pull some money from there, we're going to do it simultaneously, it'll have a huge effect on your plan. And then focusing on, from a tax perspective, what sort of vehicles do we use that will give us the most tax-efficient withdrawal strategies possible? Do we use mutual funds, which cause ordinary interest, or do we use exchange-traded funds, which trade like a stock that have capital gains?
Right, gotcha. Okay. So a lot of good information that comes from when these kind of studies are done, and when you're talking about working with a financial advisor, kind of knowing that holistic approach, there's all these different facet pieces, because we've talked about it before, and with you just kind of talking about the tax situation, we've touched on this a couple times over the last several weeks with the podcast. Look, at some point, this tax train is going to show up. We don't know when, right? But at some point, they just kind of keep kicking the can down the road. And right now, we're enjoying these low tax environments that we're in. But you have to be realistic about moving through the years of retirement. Let's say you're especially just now hitting retirement. If you're getting there, if you're, let's say, a pre-retiree or even an early retiree, 55, 60, 62, 65, whatever, you're looking at 20 to 30 years of tax possibilities coming in retirement, and those numbers are probably going to change. At some point, we got to start paying this deficit down. So a lot of good information, a lot of things to think about. And if you got those questions or concerns and you have some places where you feel like you need some tweaks or you need to get some additional information, share the podcast, subscribe to the podcast, call Sean if you need to. As we always say on the program, never take any action from anything you hear on this show or any other without talking to a qualified professional about your specific situation. And Sean's available, he and the team, by calling 855-50-RETIRE. That's 855-50-RETIRE. And as always, again, like I said, subscribe to the podcast at retirementelevatedpodcast.com, on iTunes, Stitcher, iHeart, all that good kind of stuff. And I guess, Sean, we'll wrap it up. We'll kind of do a short and sweet one this week, and we'll get on into next week's show. We'll come back here in a week or two and talk really about what you can control as an investor and focus on those things that you can control versus those things you can't. How does that sound?
Works for me, man.
All right. Let's do it next time. We'll see you here on Retirement Elevated with Sean Lee, managing partner at Elevated Retirement Group. Give them a jingle, 855-50-RETIRE. We'll talk to you next time.
Investment advisory services offered through Elevated Capital Advisors, LLC, and SEC registered